The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Morning, folks. Tommy O'Brien and my dad, Tom, is out of the office today. He's traveling up to Toronto, Canada to attend a gold show up there. So hopefully he'll have lots of good stuff for us when he makes his way back. We have red markets this morning. Dow down 50 points, S&P down 10, NASDAQ down about 30. And I am fortunate enough to be joined by our man, Mr. Basil Chapman, this morning. Basil, good Monday morning.
Hi, Tommy. How are you?
I'm doing well. How was your weekend?
Well, let me tell you something.
Okay.
You're down in Florida.
That is correct.
You would not even remember what about a minus 20 wind chill factor is.
Was it this weekend?
Boy, it must have been because it was bitter outside. It was just freezing.
Oh, man.
We're paying the penalty for 2 wonderful months, January and February.
Well, you're in March. Hopefully, you're rounding the corner, and this is one of the last ones. And I won't even tell you how beautiful our weekend was down here. So we'll just jump right into the markets. How about that?
I didn't even hear that.
Right, exactly.
What exactly are you looking at specifically this morning? Is there something
it's
on
interesting.
Your agenda?
It's interesting. We're negative. Of course, we had the Trump with the Twitter, and of course that's making big news just on the forefront, but having nothing to do with the market really, of course. And they're talking about maybe the new executive orders are going to come out today. And then, of course, you have tomorrow, they're talking to the number 2 deputy at the Department of Justice ahead of the Senate.
Right.
So that's all interesting outside of, business market news, but to see how that will shape things a little bit. But it's interesting we're negative. Gold's up a little bit, crude's flat. You have silver up a little bit. So it'll be interesting to see kind of where this goes and when we start the week off in a negative position. S&Ps are down 10, which is a decent move to start off Monday.
Yeah, well, I'll tell you, we've spoken about this periodically. And what I said was, when I recognized, it's so ironic, I completely forgot, March the 6th today.
Yes.
March the 6th of 2009, I got my subscribers long the Dow via the diamonds, right at the exact low.
Okay.
I completely forgot that it was March the 6th. And one of the fascinating things is, the reason why I thought about it is that Larry was talking about gaps being filled.
Yes.
So I was going through charts, and then he said, this is the anniversary. And then I said, of course it's the anniversary. Reason being, I spent almost the entire weekend, although I sent a lot of charts to subscribers, I spent a lot of the weekend just looking at long-term monthly charts of the Dow and the S&P and the QQQCs, that's the Index 100, trying to gauge my left side to right side price time matches and what I'm looking at. And the date of March the 15th, that was in 1933, was fascinating, because what I sent subscribers yesterday was that March the 6th of 1933 was when Roosevelt became president.
Okay.
And then he immediately had the bank holiday, and March the 15th, I believe it was where everyone came back to work, and they started, there was the bank regulations, everything was in place, and the Dow gapped up 15%.
Okay.
Now you're talking about way down in the 40s, right?
Sure. That would be a 3,000 point gap right now, just to put things in.
I wanted to give some kind of perspective when people talk about volatility and all. So this has been the least volatile market that we've had in decades.
Sure.
One of the reasons being, since 2009, we've only had one 22%, something like that, decline. That was in 2010. And then what happened was I realized, my point was going to be that in the summer of 2010, I said to subscribers, the way I'm looking at, we were still long. We held that position for about 18 months, a long position. Of course, we should have held it at 65.50 or something.
You should still be in it, Basil, but go ahead.
Right. It said, what, 26 something? Exactly. So anyway, 260 something. So, okay, this is what struck me as really quite important, is that I noticed that there was a rotational correction that summer, so that the deeper correction that we were anticipating, 22%, is nothing to sneeze at, but it seemed to me that there was a rotational action going on, that the weakest sectors were being bought during the correction, and that the strongest sectors up until then were being sold as if profit taking was unfolding. Here's the issue. Ever since then, we've had rotational corrections. In other words, there might be an IBM that's pulling back 12 points from its high. At the same time, you'll suddenly see Triple M moving to the highs, or one of the financial sector stocks. There are now 5 in the Dow. We're helping the market. Well, that essentially says that there's a dichotomy going on. If you're in the right stock at this particular time, you're not even worried about pullbacks because everything seems to be working.
Sure.
If you're in the wrong stock, if you're in a retail and the retails are just getting clobbered, you're in a bear market. You don't care that the market's at new highs. You're in a bear market for that sector.
Sure.
So and the reason why I wanted to just elaborate on that is, look at the Dow. We're looking at, this is the daily on the left, the weekly on the right, in the middle, and on the right is the monthly chart. I'll get rid of the 120 for now. And what I wanted to say is,
I tell you what, we're gonna leave it on an edge right there, Basil. We'll come back in 3 minutes. Dow's still down about 40, Nasdaq's down 28, S&P is down 10, and we are going to come back with our man, Mr. Darrell Martin, as well. So come on back, folks. 3 minutes.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Bull Bear Binary Option Hour brought to you by Nadex. I'm joined by our man, Mr. Basil Chapman, and we are going to get to Darrell in one moment. But Basil, please finish that up real quickly because Darrell's going to come on with us this segment, and he's got a bunch of trades going. So then we're going to get him back to the market after that. But go ahead, please finish your thought. You were jumping around from the daily, weekly, monthly.
Right. Very simply, I wanted to say that in my work, there's a high-level consolidation going on. It changes if the Dow, which is at 20,953, starts to take out 20,750 on the downside, and that sets up the weekly chart to make a peak D, and then we're going to have to look at other things.
Peak Ds. I like those peak Ds. I do. I saw them in that 10 o'clock update for sure. Darrell Martin, good morning. What's going on? Do we have him? I think we do. Maybe.
Yeah, just playing the chop this morning.
Good morning, Darrell. Sorry, we couldn't hear you at the beginning there. I heard it. So you've been playing some chop this morning?
Yeah, just having the oscillation, and sometimes that's a fun, you can see the zones where where the market's playing between. You can take advantage of that pretty easily. I was thinking of you when Basil was saying maybe we'd have a choppy market, and I was saying maybe Mr. Darrell Martin is going to be out there absorbing that premium, right? Is that yeah, hopping in, and there's not a lot of premium in the market this morning. Like the market isn't expecting it to go either way. But it's pretty easy to read. Right now I'm looking at just the deviation high there on the Dow.
Okay, this is the Dow chart we're looking at, sure, okay.
Yeah, 20,960, sort of the...
So where are some of those deviation levels? You're like, what's the half deviation from where we are right now even?
Well, the half deviation would be all the way down to 28.74.
Okay, so about 75.
The market's more seeing like a 28.90 right now up to a 29.60. I mean, so you're still talking a decent... range right there.
Sure.
And you can play just back and forth in between those levels. And, I mean, you can make a decent amount of money in chop if you can, identify your points correctly.
Sure.
So.
And how are you trading those, Darrell? With the spreads or with binaries?
I like trading with spreads and futures.
And futures,
my preferred way. Yeah.
Sure. So are you just checking out the Dow this morning? What have you had your eyes on?
Yeah, the gold sort of flew up right there at the end of the day. Like we had a nice call going on that we had Friday. Your dad and I, and
yes,
it flew up and didn't finish real strong with a 130, but it just kept going, and it actually burned up to one deviation move after the 130 close, and then just sort of teetered out after that. But it's pulling up charts, scrolling through everything, and on the Dow this morning, and and like I said, Basil was also talking about the Dow, and so I find that interesting. Basil, you were talking about the Dow going down to 20,700 and that
750, would you say, Basil, for the next?
Let me just go through this again. What
Sure.
I'm looking at is that 20,880 is the 9-period exponential moving average. The work that I'm doing right now suggests that it's a slow rollover. It might accelerate later in the week, but on a very short term, I'm looking at the 20,008. Let me just get it exactly right. Yeah, 20,880 is key support. That goes, next level is 20,770s.
It's interesting. And as we're sitting here talking, even the
that lines out exactly with one deviation is 20,766 and half deviation is 20,874. So.
Oh, nice.
That's based on the implied volatility. So exact same analysis right there. So perfect. I like it when it lines up, get some confluence.
Isn't it fascinating? I always say that a good system, a robust system, can accept other techniques as well. So that's very nice to know. I mean, it complements it. And I'm looking at, I've developed resistance and support levels based on other factors, and I have them, they show up right here. So on the upside, 20,965 it's really going to be tough to get there, but that's very strong resistance. But you can see this green line here, which is showing a buy mode, has turned to a down mode here. So we'll see what happens. But I think that the upside is very, very limited. The other thing also is that if you look, I look at this also in terms of presidential announcements and things like that. And I think that the market's just getting a little tired. It needs a rest. And that's basically, you're looking at a chart that says.
My wife asked me last night about what, Trump posted or something. And, not getting political or anything. I'm like, at this point, it's just starting to feel, just like static. It's just been so much for so long.
Sure.
No matter what side you are, it's just numb at a certain point.
And it is interesting saying, the market's tired, because I was thinking the same thing even before that 300-point day last week, though, as well, which is interesting, right? It's like that kind of was just surprising, but maybe that was kind of the last leg, and now it's really struggling at the tops.
We'll have earnings coming out next month. That will, liven things up a little bit,
Sure.
So we'll have Fed announcement coming out. So, they've talked about raising that rate up. That'll liven things up. So.
Yeah. And when is that the 15th, Darrell, do you know? Next Wednesday, maybe?
Next Wednesday, I want to say it is.
We'll pull it up during the break to be sure, but I believe so.
The Ides of March.
So what would your plan be, Darrell? And we'll talk to you this week, but that'll be a fun time. Do you have a plan when you come into something like that, like an expected Fed rate hike? We haven't really dealt with that type of a scenario in the markets very much.
It is next Wednesday, by the way. At 1
okay,
o'clock.
Great.
And they're doing a press conference as well, which is usually a more volatile time, and they usually make their changes when there is a press conference.
Okay.
Every other funds rate, they do a press conference.
Okay.
And I think there's been all but one where they've only done it on the press conference release.
Okay.
So they like to be able to come in and calm things down.
Sure, right. Get their say in what's going on.
Exactly.
Yeah.
So whenever they do that. So like this one there will be, and then the one, 3 months later, or 2 months later, whatever, 8 weeks later.
So on something like that, would you, do you just look at kind of the implied volatility as that comes up on Nadex and then see kind of whether you're going to try and make a volatility trade or absorbing it for some chop in the indices that day?
Well, I expect chop until the announcement comes out after about 10:30. So after about 10:30, market just goes like quiet and waits for the announcement.
Sure.
So you can play the morning. A lot of times you'll get some people unload some positions and cause some volatility out, and a lot of times you'll get a little nice trend like on the opening hour and a half, which are also a little more difficult to trade, but you'll get some nice movement right there, and then things will just start to flatten out, and then it's usually a lot of if it is something, it's very hard to read.
Yeah.
So it's usually pretty flat. I will look to see if there's any premium during that time. If there is, then I'm definitely going to go for it. Because you don't usually have much of any volatility until the release.
Sure. And so would you exit that trade kind of right before the news came out?
I would exit right before, choose expirations that came right up too, because I wouldn't expect the premium to drop on an expiration after it until the announcement came out.
Yes, yeah.
And then a lot of times if the premium is just insane, a lot of times I'll still go for a premium after it. And because a lot of times you literally may have a really good risk reward ratio if you do both sides.
Sure, right.
So
we like those two-sided trades. That's what I was thinking of, and as I was asking you that.
Sometimes you may have a 70% premium to 30% risk, something like that.
Sure.
And if you're playing both, and because it's just so exponentially high.
Do you do any options trades? On like the indices themselves, Darrell?
I started my living doing options trades on the indices, so that's how I quit my day job.
No, just because it's a similar application for sure.
And now I just move over to doing them on the indice futures, on Nadex. I mean, I trade very little options, like vanilla options at this point.
Yeah.
But I still I'll play with one now and then.
Yeah. No, I like looking at the option market. I do because it's a premium game, and I like that risk reward premium game.
Now, if the volatility is low going into a Fed announcement, I'm definitely going to look for a straddle or a strangle.
Okay.
So I can take advantage of that on binaries or spreads.
Perfect. Well, listen, I know you're looking at the market. Darrell, I really appreciate you coming on, joining Basil and I. Have a great day, and we look forward to talking to you on Friday for the program, man.
All right, see you then, man.
Awesome. Take care.
Thank you, Darrell.
Okay, folks, come on back. We have the markets negative. Dow's at about 12,929. Come on back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Darrell Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Bull Bear Binary Option Hour. I am Tommy O'Brien. I'm joined by Basil Chapman. We have the Dow down almost 70 points, NASDAQ approaching 38, and S&P is down 12. So, Basil, I see you were just jumping to, I was going to say gold, because I was checking out gold a little bit. That really that was an amazing move last Friday, as even Darrell was talking about, really, and I've highlighted it on the chart real quick. I mean, you're talking about from 11:30, we're trading at 12.24. We shoot up all the way to 12.30. We're back down to 12.25 by about 1:30, and then by 2:30 in the afternoon, we're up at 12.36.
What is really fascinating about gold, the move to the upside over the past many months, together with the dollar moving higher, is really unusual.
Yeah.
There's a correlation that is really like a mirror image. I always think of a Bach piece where he has a melody going one way and the bass line going the other. It's in counterpoint. That's what it's called, counterpoint.
Okay.
And counterpoint is usually what you see where gold goes down when the dollar goes up. It's not like it does it all the time, but there may be 3 to 5 weeks, and that occurs maybe twice a year, where on the longer term, you'll see the two going up together. It doesn't mean to say they have to go in the same proportion percentage-wise, but they go in the same direction. But most of the time, they work counter. So my contention is, and of course, your dad is the expert in gold, so I'm just talking about this in my own experience.
We're all our own experts, right? Go for it. Exactly.
I guess so. In my experience, periodically over the decades, when I've seen gold moving up like this, when the background for gold is really not all that positive, my thinking is that it has to do with the perception that it's a fear factor. And it's there because there's a really big uncertainty in countries. I'm not talking about regular folks. I'm not talking about mutual funds, hedge funds. I'm talking about governments.
Sure.
That's what it looks like. It looks as if there's been concerted buying, and the concerted buying is being there for the reason of some kind of protection, a protection against, nobody even knows what it is, but it's a protection.
Yeah, gold is always going to have value no matter what kind of turbulence you're dealing with in terms of your currency or whatnot, for sure.
Which is why a lot of people always say, have some gold in your portfolio.
Yes.
Just to ignore it. It's there for, even if it's there for
It'll
the
help
grandkids
stabilize
or whatever.
everything in the long run.
Right.
It does. I mean,
In the long
inherently.
run,
Yeah.
Right. So this is what I really think, that gold is under pressure right now. And one of the things that I like, and this is really something that your dad will be able to speak to you in a much more coherent way, but my thinking is that I prefer to see the gold stocks moving higher to tell me where gold is going to go. And I like to see gold stocks moving lower to tell me where gold is going to go.
And I picked up
rather than just the metal.
Right. No, and of course I listen to my dad forever, and I'm biased being his son. But it is remarkable how those equities can get a leading indicator to know kind of to sometimes anticipate what's going to happen in that market.
And one of the reasons probably is that a lot of capital goes into having a gold. I mean, I grew up as a teenager. I was born in Cape Town, but as a teenager, I lived near Johannesburg, in a little mining town.
Okay.
So I grew up riding my bicycle up those stone. I know the gold mines quite
right next
well,
to the mines. Pretty cool.
Right, but I never ever studied gold per se. It was just that's I had friends whose parents worked in the gold mines, etc. I don't know. I've been down a gold mine. I've been a mile, and I think it's over a mile down.
I have definitely not. Go ahead. Yeah.
It is. I have to tell you that it is one of the most, it was the most extraordinary experience, but the most frightening experience.
I can imagine.
And you go down, this is, quite a while ago, very primitive conditions.
Right, I was going to say, we all know the dangers and have heard the stories of any mine. Go ahead, yeah.
Right, you go down in a little elevator, like with it looks like a cage. It is a cage.
Sure.
And it comes down, and what's happening is that you have the outfit on, you have the helmet, and you have a little pit helmet with the light, but then you also, and they've got the yellow slicker and all, but then what happens is there's water coming down all the time. Why is there water? Because they don't want dust.
Yes, from the air, right? They want to keep,
And this was the days before air conditioning that I had gone down, so I don't know what they did. But when you stand on the shaft itself, they've got these logs that are these little, maybe, I think that, if I remember correctly, they said there were 3 or maybe 4 foot. They were just they cut the trees and they just put those logs in. And those are propping up the roof of the cave. And if you do slide, there's no fence or anything by the excavation that had been done. You can just go straight down. So to me, it was an incredible. I'll never forget it.
A little bit of adrenaline and exhilaration, I'm sure. Yeah.
I think it was more. I don't know about the exhilaration.
And a little fright. No, I'm with you. All the above. Yeah. Yeah.
So the respect I have for a mine of any sort is just. It's really tough.
Yes.
No light, no nothing. You have a headlamp, but there's nothing there. So this is a tough business and a very expensive business. And so I'm looking at this and I'm saying, you know what? That whole big move that started, the last move that started was in October, the 12th, the week of the 16th of December. That's it's almost like a single leg A, although it's gone to a B in my waveform. The MACD is good. The stochastic's actually quite nice at 81. I'm thinking that this is going to hold quite well. It's the same sort of thing. It's a high-level consolidation. So I would not be surprised if gold pulls back. I'm looking at the 1220 as key support, but really, I wouldn't be surprised if it slips a little bit under that. And that says to me that the dollar is not going to do anything big on the upside, but it could also chop around, and the dollar at 101.52 could move a little higher. Now, everything starts to change if the dollar takes out its most recent high of 102.26 and holds there. Then I think the gold, I think, will pull back a little bit. So this is just extrapolating from the data that I've got, but most importantly, I really do think we're due for a correction. We kind of, for my subscribers, we are leaning towards a correction here in our positions, and I just think that it'll be very healthy. It'll be much healthier for the market to have, a few hundred points in the Dow digestive phase. The S&P, you can see, this is what I was talking about before, that divergence. Now, the Dow's down 85, but look, the S&P is down 14. The S&P is telling me that normally I'd be looking at the S&P and say, oh, the Dow must be down 120.
Right.
So there's a divergence there. And that's really what I was talking about before, because there are dividend stocks that have done extremely well in the Dow. There are a lot of financials, and if we look at the XLF...
I was just going to say, Goldman Sachs alone, we pull it up, is constantly the one, just because it's a $250 stock, that's adding multiples to that Dow by itself. Exactly. Go ahead.
Right, and it's made a peak D, and there it is. Also in a consolidation, the weekly chart says, peak E. The upside should be limited. Downside could be fairly limited, but it's within a trading band. I think that Goldman Sachs, there's a good chance to test the 247, 245 level over the next week. So that's my consensus right now, leaning towards the short side only because it's a digestive phase. But the monthly charts are, so look at Goldman Sachs monthly chart. This is only a single leg A to the upside.
Those financials, especially Goldman Sachs. Well, when you run half the cabinet of the U.S. government, Basil, shouldn't your share price appreciate at least somewhat?
Well, from 1929, this is something they've been doing. I've always been there.
Government Sachs, right? That's it. Yeah. And I've really, I've been around it, but I'm reading about so many stories just in how that's how you maintain wealth and power, for sure. Why not? Come on back, folks. Basil Chapman, Tommy O'Brien. We will be back in 3 minutes. We have the Dow down 90 points now. Come on back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Tommy O'Brien, Basil Chapman, Bull Bear Binary Option Hour by Nadex. Give us a call, 877-927-6648. And a real quick promotion. Basil, I'm sure you've heard we're talking about it. We have a big event coming up March 18th. My dad doing a workshop down in Tampa, 2 75-minute workshops. Starting off 7:30 in the morning. He'll do his first workshop 8:45 till 10. Second one 10:15 to 11:30. And then we'll have some question and answer. And then we'll have a nice Tiger rooftop luncheon special 12:30 to 2:30. I encourage everyone, whether you're in the area or can make a trip, to sign up. March 18th. That'll be here before we know it. 12 days away, which is amazing. So come on down and check it out. So
that should be fabulous.
It should. We're looking forward to it.
Besides the venue and everything else.
Yeah, we're excited. That's a beautiful hotel.
Fabulous.
They just built it about 5-6 years ago, I think.
Oh,
I used
really?
to live right near that area. Very familiar with it. They have beautiful restaurants, and actually a lot of the away NFL teams, if they come to play the Bucs, will stay there. I think one of the national championship football teams, because they just had that going on this year, had stayed there. So it's a beautiful hotel, and we have better weather right now than negative 20 degrees wind chill. So I encourage everybody that will be warm, and hopefully we'll get some beautiful weather.
And of course, the information received is invaluable.
Of
Terrific
course,
stuff.
and it's nice. We're excited as you do the morning session, and everybody wants to hang out. Whether you're in the den, whether you've just heard people on the air, right? You meet a face that maybe you heard the voice, and so then we get the Tiger
Really
Social
nice.
where everyone gets to hang out for sure.
So, I just wanted to mention, you talk about Tampa and the building that's going on there. You would not recognize Somerville.
Okay.
Somerville down by it's on the other side of the bridge.
Sure.
And it is, they've got outlets there.
Okay.
It is so built up, and they've got condos being built.
It would make sense how close it is to the city, right? A nice, beautiful town.
Right.
Yeah, and you're right next to the city. Same thing. We were just
next to the water. Yeah.
I was with my dad yesterday, some friends, and of course we were talking about real estate, as is usually the case, or the market, right? And just talking about South Boston in general, same thing. I mean, what a beautiful area, so close to the city. Of course, it makes sense that that's going to just take off and go through the roof, and everything around that is just taking off. And that's the same way in Tampa. Same thing. Where St. Petersburg, we were hanging out yesterday. You just have these beautiful cities right on the water. Same thing with Boston. Right. You can't beat that. Yeah.
Well, there's one thing that can beat it, and what they need to do in Boston is use the water like some of the other cities where you can, you have, in Sydney, Australia, you go from ferry from one place to the other, and that's really what they need here.
Very cool, yes.
People actually using the...
They've started another service down here that you can go from Tampa to St. Petersburg via shuttle, exactly, a little ferry that runs back and forth. They have another one that started just last year that does about 7 little stops just right around Tampa.
Makes such a difference.
I completely agree.
Go to places they haven't been. It's pretty. They like to walk along the promenade, and they need that here.
Yeah.
I'm sure it'll come.
I'm sure.
So, market-wise, I wanted to show a pattern that I think people might want to take in just as a matter of interest in terms of technical analysis. There's a pattern that I look at. It's called the H pattern. We used to call it, I still call it the dreaded H pattern. Why? Because if it takes out the left side low, then that H starts a brand new H, and it can keep going down until it forms a larger formation, and then you can start to see some kind of a basing area. So that's the pattern. Now, if you go to the charts that we're looking at, look, even right here, there's the H pattern. We've just seen it in the E-minis. The low so far today is at 23.67.25. The high was earlier on at about 7 o'clock. There was a rally up to the 2380.75 area, made that H formation. You can see in the, let me just get this off here. You can see there's almost a left side, right side price time match between the rally, the number of bars to the upside, number of bars to the downside. It was quicker. It just took out the left side low, which always is a hint to say, hey, be careful. And there you are. You get your second arch formation going to a lower low. Now there can be a little bit more of a rally attempt. And I would say that if you can see the 2371 area taken out, then 2373 to 2374 is a bounce area. But I think we're looking at that pattern we were looking at earlier of this one where you go to lower lows and lower highs. I think that's what we're looking at. This might be a little deep. I'm just showing the
No,
pattern.
I love that you pulled it up. You know, I've been through. Now, is this in your introducing the Chapman Wave methodology? Is that what I'm looking at here, Basil?
This is the CD. Then we go right to the front of it, just right there.
No,
Introducing
perfect. And that's,
methodology.
you know, you'd think we planned it because I'll give you a nice promo, but I've been through it, man. I forgot how long it is. 476 slides. It's amazing. So if people want to get it, I'm just going to go real quick for the website, right? You go right to the front page of TFNN.com. You'll see Tiger Store right at the top. Click on Tiger Store, and right under there, introducing Chapman Wave methodology, $249. Basil, it's an amazing course, 476 slides, walks you through everything. So I encourage people to check it out.
And it's really, it just goes chapter through chapter, different patterns. I even have a look right here, if I can find it. Right there. Let me see if I can do this slowly. Yeah, there's one of my cartoons. I used to be a cartoonist years ago. The stock market is like a finely tuned orchestra. All these sections rotating, this guy saying to his friend. Then together they build to a huge final crescendo. And the other guy says, yeah. And as usual, I'm buying when the bass drum hits the last climactic chord.
It's always a battle at that top, man.
We're always afraid.
Maybe we'll have to get some new comics as we approach Dow 25,000. I'm sure you can have some material.
Look at Goldman Sachs. We were just looking at it.
Yes.
If you bought Goldman Sachs, here's the weekly chart. Here, you thought, oh my goodness, this could be a C and it's going to be a peak, but the C keeps going.
That's amazing. And that, of course, is the election, right where you're pointing. But go ahead, yeah.
But it even started before the election, back in July. Yeah. Yes. So you keep thinking, okay, oh my God, how can I buy it here at 200? Oh my God, how can I buy it at 220? How can I buy it at 240? And the darn thing goes to where? It goes to 255, and now it's having another little bit of a digestive phase. Except this is the one that says to me, in this pattern, I would not be surprised if 244 is the next level of support for Goldman Sachs. But isn't it fascinating? Because, Kramer always says, it's not what happened, it's what's going to happen.
Sure.
And I thought that I know people have different opinions about Kramer. I happen to respect him a lot. I followed him, not daily or anything, just periodically since 1986. I've seen him around. And the wealth of knowledge is really what I respect. And I think that's really a very important thing. It's hard to actually imbue in your own trading that the higher things go, the higher they can go.
Sure.
But that's something it's hard to do, but in many ways, for instance, right now, I believe there are so many people that are not in the market. All those people that got out before the election, do you think that with the spiral to the upside, they got in the first couple of weeks? There's no way.
Right. How could you be a buyer after that huge acceleration?
It's the same
right.
thing we were talking about, but now I think they are getting it. I think so.
And that's just so tough in the same way, right? I mean, just that, that run in the same way Goldman Sachs going from 160 to 250, that's been a huge part of the Dow run up since that time,
And one of the big clues, it's even hard for me just to constantly keep saying, and I keep repeating the mantra, that the volatility index below 13s in the 12s or 11s or 10s is buying pressure. When it gets to the 13s and 15s, it's selling pressure.
There's no fear. Everyone's buying, man. The market is going up. It's one way. We'll see what happens. All right, folks, come on back. We got one more segment. Basil Chapman, Tommy O'Brien, and markets are negative. Dow just hanging around, down 80, S&P down 13. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD. Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Darrell Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tommy O'Brien, Basil Chapman, the Bull Bear Binary Option Hour. And we're looking at the Dow futures right now, 12,913. Dow down about 85. And crude oil marginally lower, 14 cents. And gold and silver marginally higher. So, Basil, what do we have coming up for the Tiger Technicians Hour next?
So what I want you to do in this coming hour, I want you to go through a couple of aspects. I spoke about the divergences. I want you to show that the Dow has 5 financials in it. This is the highest number it's had ever, I think.
Okay.
And I also want you to show General Electric, what the implications are with General Electric, because I think it's still a very powerful composite index of the Dow. I use it all the time to see where, kind of telling me where the market is. There's something else that's really unusual, is that the dividend stocks in the Dow are doing something extraordinary, and they are moving higher. And it's producing an effect that I actually don't like to talk about it because we have the position, but it is the only way that I can demonstrate what I think is really going on in the market. So this is something that we own, which is the DOD, which is the Elements Dogs of the Dow. And it's made up of the equal weight of the 10 highest yielding Dow stocks. So what's happening right now is that these stocks are showing, because of they were low-price stocks yielding the best dividends. Now the stocks themselves are moving higher, but I'm not sure just why it is that the dividends are so extraordinary. Look at a move. This is a Dow. Yeah,
those are some serious charts.
This is in the Dow. This is part of the Dow. Look at this. This is a monthly chart. We're talking about something that would move just from $5 to $5.50 or something. Very big percentage, but very small moves. Look at the size of these candles, the last 2 candles. So we've been taking a little bit off. We still have a core position. I even said today we've just, money management-wise, we've got to take a little bit off here, and we're planning to put that back on a maybe a few points decline at some point. But what's going on here, and that's what I was saying, that the rotation through the different sectors says that there are certain, if you're very fortunate being able to identify this, I'm sure it's going to be pulling back at any moment, any day now. I've been saying that for a few days.
Sure, no, I hear you. Yeah.
I don't mind it moving up. It's just that this is not the way you really want stocks to move. if you
it's got to be worrisome. No, I'm with you. Right, it's got to be worrisome.
But it means that at some point there's going to be a deeper correction. And what's the implication for yields going forward? And we're going to have to do a lot of thinking about that. So I just wanted to show, as I say,
so that's the 10 highest yielding stocks. And I think I heard you talking about that, whether it was on your show or maybe an interview with my dad.
Right.
Because so that'll lend itself to lower price stocks, right? Is that how? Because
within the Dow.
Within the Dow, correct. Within the Dow 30. Just the lower price stocks could have a higher yield because by having a low price, of course, that yield could be exacerbated. Yeah.
That's right. The lower it goes, the higher the yields. But that's also because they usually increase the dividends. So that's one of the issues. Now, one of the things that we're looking at is the number in the den. P says, how many stocks, 33% move in Dow since the election? How many stocks involved?
Yeah.
There are actually very few.
As in, how many stocks have accounted for almost a third of the move, right? Yeah, exactly. Go ahead. It's relatively few have.
It's a small number. Right. It's a very small percentage. But
Goldman Sachs being probably one of the biggest, if not the biggest, I'm sure. Not even looking at it. Yeah.
But what's interesting is that on the corrections, the others take their place. That's why the market hasn't dropped. I mean, even now today, we should be 150 points down in the Dow. Something's there to say, no, I want to be buying. People are buying. So
right, because the S&P could fall apart, but if Goldman Sachs is doing fine, then the Dow is definitely not going to be down in correlated value, right?
Correct.
Basil, thank you so much for joining us. Everyone stay tuned. We got Basil Chapman coming up at 11 o'clock, then swim lessons, Steve Rhodes, Dave White, and then coming back, we have Steve for the 3 o'clock hour and Larry Pesavento back at 4 o'clock. Basil, have a great day. Have a great hour, man.
You too, Tommy. Thank you very much.
Thanks so much. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.